in mentioning that most of the retail investors would try to sell out in the secondary market and apply in the primary market, that is the follow-on public offer. Considering the fact that retail investors are going to be given a discount of 64 rupees. But Cheryl, one fact which I would like to make very clear is that whenever such large mega issues hit the market definitely turns a little weak because a lot of market liquidity gets sucked out from the system. And there have been earlier examples like LIC, Paytm, Coal India, where we have seen that typically in such kind of issues it takes a longer time for investors to make money. So those investors who want to take a longer term call should only apply in the follow-on public offer. I mean, my sense is that this follow-on public offer would definitely get subscribed comfortably. But in terms of the risk reward, I think only if the investor has a long-term view, one should look at this. Considering the fact that the stock price which Kunal mentioned, the frontline share is going to be under pressure because obviously the discount is quite significant, and obviously since the issue is large, my sense is that the market now currently does not have that kind of appetite, in a very comfortable way, which could digest this issue comfortably. And more importantly, they are doing this issue just ahead of the budget. So, we don't know what can come out in the budget. So typically only long-term investors and those who can wait in for the next 12 to 18 months can apply for the follow-on public offer. But do take into account that normally the history of the market says that large mega offers like these has definitely a negative impact on the market sentiment. So one has to be a little cautious also at the same time. Cheryl, I think we are now approaching the union budget very soon. So I think investors should be very careful as far as allocating capital in 2023 is concerned. My sense is the markets will continue to remain volatile, considering global headwinds from US and Europe are pretty challenging as of now. So I think stick to the large cap companies, stick to the companies which are larger in size, and try to adopt a SIP approach. The markets being volatile, you will get lots of opportunities to accumulate companies at a regular market kind of corrections. The market is in correction mode even today. So I think quality businesses are available at decent valuations, and I think one should obviously follow a disciplined approach in investing in the equity markets. And over the longer term, I think this strategy will definitely work out. But I think keep monitoring your stocks also. It's very much essential that you monitor your stocks and do keep a tab on the quarterly performances, the conference call kind of commentaries, and that I think would definitely help investors to generate wealth in the longer term. But I said obviously don't invest in a lump sum amount. Try to adopt a SIP approach when you want to build your investment portfolio. As far as the business is concerned, the business has been growing quite rapidly, and I think Tanla is one of those companies which is a very value added kind of telecom service player. My sense is that unless the investor has got a 12 to 15 month time frame, it's unlikely to actually make money in the short term. Fundamentals continue to be pretty strong. The company has been adding a lot of new clients, and plus increasing its kind of product basket. So typically, if the investor has a medium term view, I would still suggest him that he should not be impatient, and he should give in a time of at least another 12 to 15 months. By that time, hopefully FY24 numbers should be out, and obviously on the basis of FY24 the stocks looks pretty attractive. So I think continue to hold on, and I think this kind of underperformance will obviously get negated as the numbers get thrown out, especially the third quarter and the fourth quarter of FY23. Yeah, I think the entire footwear market, Cheryl, in the September quarter underperformed, and I think most of these companies were affected by input costs. Even the volume growth was quite insignificant. In fact, in case of Relaxo, the volume growth was not in a positive kind of trajectory. My sense is that the footwear market in India is a very large market, and Relaxo is a market leader in the rubber footwear segment. So I think you have to give in a little more time, maybe the next 12 to 18 months before you could see a decent rise in Relaxo. Coming to the valuations of Relaxo, this company is not valued cheaply. It's a fairly expensive stock, and unless and until we see a strong earnings trajectory coming in, hopefully in FY24 and 25, only then we could see a significant re-rating. So, if the investor has already taken a position, my sense is he should at least give a time of 12 to 18 months. Only thereafter, I think things should look better. And I think, large investors exiting the stock is not a big concern for the stock, considering the fact that the company still enjoys a lot of patronage from the HNI, from the PMS and the fund community. So I think longer term footwear market will grow. They would also benefit, but in the near term, the stock would remain volatile and possibly could underperform. So please keep that in mind.
Avinash, coming to you once again, Nagesha wants to know the fundamental view on Ammy Organics. He bought 61 shares at a price of 952, currently at a loss, but going ahead, he wants to know the outlook on fundamentals of the company, and also, is this a good time to average out this counter?
Yeah, I think Ammy Organics is largely an API player, and I think they have been doing pretty well. In fact, in the last quarter, the management commentary has been quite encouraging. The management mentioned that they could possibly see a decent kind of price revision in API prices, and that would actually trickle down to their operating EBITDA. My sense is, the investor has to take a longer term view because API market had corrected earlier. Most of the larger companies like Aarti Industries also showed softer performances. So I think unless you give a time frame of 12 to 15 months, the API market is not going to improve drastically. But yes, they have a large set of customers. The export basket is also growing. So typically, I mean, from a medium term angle, I would suggest please hold on. Business would continue to grow. But yes, for the next 1 or 2 quarters, margins could be under pressure. So I think shorter term, there could be a little more pain. But in the longer term, if the investor wants to stay invested, he could make a lot of money provided he gives a timeline of at least 12 to 18 months. Yeah, I think from the electrical equipment space, I think Bharat Bijlee could be a very interesting bet, considering the fact that it's a very old player, has a very marquee name, has a very good balance sheet, and actually I believe that in the next say couple of years, considering the kind of investments in the electrification sector plus the kind of consumer durable electrical segment, company should do well. Obviously, in the next 12 to 18 months, we could see some sort of benefits coming in on the bottom line and earnings trajectory growing positively. I would believe that unless he's got a lump sum amount, I think it's better that he can invest in a SIP mode. Whenever the market corrects, this would give him an opportunity to actually buy the stock at a reasonable level, which could actually give him a better ROI. So Bharat Bijlee is definitely a buy on declines. Yeah, I think Rallis reported numbers which you rightly mentioned were below expectations on all parameters. My sense is that Rallis could take a little more longer, considering the fact that most pesticide and agrochemical companies, the better time frame when numbers come out is normally the first half. My sense is FY24 should be a lot better, and I think a company which is managed by Tata's, which is a virtually debt-free business, very well managed working capital, management, I think will require a little more time. So for the time being, I would suggest that he needs to hold on to Rallis at least for the next say 6 to 12 months. I think hopefully next year should be a better year. And as far as AGI Greenpack is concerned, I think it's a long-term story. I think the investor also here needs to take a 12 to 18 month view. Typically, I think in these companies, the earnings trajectory takes a longer time to get materialized. But definitely, I think long-term prospects look good. So I think both these companies, Shristi, I think the investor needs to take a slightly longer-term view, at least 12-18 months, and thereafter only he can expect a decent risk reward.
All right, the next one is coming from Hemanta Datta, and this one is for you, Avinash. He wants to know about Praj Industries and NTPC. He's already holding both of them in his portfolio, and he's intending to hold them for the longer term. But he wants to know whether it makes sense to add some more of these counters to his portfolio.
As far as Praj is concerned, Cheryl, I think it's a play on the ethanol market. It's one of the largest players in the country which makes ethanol equipment, and it already is sitting on a very healthy order book of almost 650-700 crores. The company is always a technological kind of company, in the sense that it's working on a lot of new products like compressed biogas, specialty aviation fuel. So all these projects are bound to be reflected in the next say couple of years. So possibly, if he has some liquidity, he could definitely average or maybe accumulate some more stocks on Praj, because hopefully the coming budget could also announce some big incentives for the ethanol sector. My sense is that I think unless he has a 2-year view, the risk reward may not be great. So keep a time frame of at least 18 to 24 months here. I think Siemens and Cummins, Cheryl, would be a better bet. And as I mentioned to you, Adani Enterprises could see a little bit pressure ahead of the follow-on public offer. So I think if he has made a decent upside in Adani Enterprises, I think he can definitely shift to stocks like Siemens and Cummins. Siemens has recently got a very large order from the railways, and Cummins is a very large opportunity in the capital goods space. Both these companies are expected to deliver very strong December quarter as well as FY24 numbers. So I think Siemens and Cummins could be a good switch at the current level, provided he's got a 12 to 15 month kind of time for that.
Okay, moving on, Kunal. Pardon please. Avinash, coming to you. Harika wants to know the fundamental view on Zomato as well as Karnataka Bank. She's holding Zomato shares from a price of 74 rupees and Karnataka Bank she accumulated it from levels of 170. Currently at a loss in both of these counters, but she's a long-term investor.
As far as Karnataka Bank is concerned, Srishti, I think she should hold on. I believe that numbers for the December quarter and for FY24 should be very strong. We are seeing a credit growth of almost 17-18%. So I think that should percolate down to better growth in advances and deposits and obviously profitability for Karnataka Bank. So I think after a very long time, Karnataka Bank has started delivering. So I think she could expect better upside in the next, say, 12 to 15 months. So continue to hold on to Karnataka Bank. And as far as Zomato is concerned, I think she needs to be a little more patient because the company still continues to burn a lot of cash, and the company is yet to record any positive operating EBITDA or operating cash flow. So my sense is here, on any upside or any rise, I think if she can exit the stock, that would be better, because clearly most of these fintech companies profitability is way ahead and valuations still seem to be quite expensive. So I think she has to take a call whether she wants to wait for the next 3-4 years or whether she wants to switch over to some other promising sector like capital goods or housing finance or autos, where I believe the market presents a lot of opportunities now.
On to the next one. Avinash, Tumala Rao is a long-term investor and he is already having 2x of returns in L&T. He is holding 700 shares from a price of 1147 rupees. The stock is near its all-time high levels. What would be your advice? Continue to hold on or book some profits at these levels?
I think he should book out some so that his original cost is recovered. The margin of safety would get better, obviously if he books out some profits and converts, makes his original holding almost free of cost. And the rest of the quantity, Srishti, I think he should hold on. My belief is that L&T is a very strong developing story, and obviously in the coming budget, if manufacturing and capital goods is given a further thrust, then that could definitely benefit the company. Definitely L&T looks poised to move further, but considering the kind of price he has entered, he should book out at least 30-40%.